What is going on, everybody? Welcome to another episode of Trader IQ Trading Strategy Examples. In this one, we're going to be talking about the AUDJPY, and we're also going to be talking about a couple of live trades I took today, and we're going to show you examples of that and a little bit of bonus stuff too. So stay tuned to that. Read the risk disclaimer. If you need to, pause it. See you soon. Okay, we're going to start on the weekly chart, and what we're looking for is we're going to see what the trend is, and at this point, or at this moment, we are in an uptrend on the weekly, and what we were just waiting for was a pullback deep enough, and we're going to see a swing low form here, which once we actually get a candle, a swing low set up like that, that's when we would go to the daily time frame. But first, just remember that we really need to see some kind of stalling deep enough into the level. So the reason why I have these moving averages is I like to see it move below the moving averages. Then I will be looking for a buy scenario, because if you think like a bank and not like a retail trader, these lows right here are probably going to be swept out. Not all the time, but it's so high in price at the moment that eventually they should be bringing it lower, coming down to what would be like a trend line right about in here. But basically, we're just looking for a good price to enter the market. But this would be an oversold scenario. So once we're oversold, then we'd be looking for stalling in the market. Once we see that, then we can move up to the daily time frame and get a little bit more detail. And at that point, this is where it started to stall out. And we want to see a break of some swing highs right here. And we got a nice move up, and we actually broke this sideways action right here, this little consolidation level, and then we moved down pretty quickly. This move down is where we start to look for the setup. And again, we're going to look for a stall out at a good price level. If you can see, it looks pretty much just like it did on the weekly. Once we get the stall out, we need to see this candle be broken without this candle coming below the previous candle. So we're looking for a swing low. Once we get the swing low formed, after this candle is closed, then we're going to go to the 1 hour time frame, which would be the start of the daily candle. Okay, let's go back here. So this is where your swing low is, right here. These 3 days. So the 6th, 7th, and 8th. So this is that higher candle. This is that little doji, little small miniature hammer thing that you saw. And at this point, this is that day that you're watching. And what we're looking for is we're looking for the market to come up and break this daily high right here. So let me mark that for you. So we're looking to break this right there. Let's change that to white. Okay. Once this breaks, we're going to look for, again, if you start to see the pattern, looking for a deep retracement below the 50% fib level. That's when we're going to be looking for the market. If you see, you're going to get this little move here off the 50% level, or right around the 50% level, triggering a lot of people to trade, and then they're going to come down and take everybody out that puts their stops just below that level. So let me draw the Fibonacci, and we're going to start from where we're going to draw the fib from where the move started that broke this high, not here, but here. You could do it here, doesn't matter, works out the same. And if we want to, I can actually do it if you'd like to see it. We're going to put it right there. We'll take it from there just to show you. Doesn't really matter. The point is we're just looking for a deep retracement past the 50% level. And this is your 50% level. You can see it came down into the 50% level, triggered people into buy, because the 50% level is a very popular level for traders to take trades, and they usually put the stops just below there. But you see how that works out? Then they come down, they take those stops out. Once they do that, it comes right into my strategy entry level, which is in this red area between the 62 and the 79%. You are not probably going to have a Fibonacci setup like I have, but if you can see here, I've got the 100% level, 79, 70.5, 62, 60.2, 50% level. I don't have any other levels because I don't want to be distracted by those levels. I don't need them because it's not part of my strategy. Then we have the 0% level. Next, we're going to have a negative 27% level, which is actually the 1.2 level. If you were going to flip this over to get the extensions, I just put the extensions above so I can just have one indicator here and I don't have to mess with it after that. Then you're going to have negative 61.8, which would be the 1.618. And then, of course, the 200% level, which on this would be negative 100%. So that way you can get the full symmetrical price swing all in one little setup. And you can do this too if you'd like. I didn't come up with this. This actually was invented by my mentor, and I use it because it works great. Because I really liked the way he trades, and I adapted a few of his tools and trading strategy into my trading strategy. But the main point and reason why I like to use this entry setup is because it forces you to wait for a good price or an oversold condition before you enter in the trade, and it gives you a very, very low risk entry. So you're going to have a small stop, and then you're going to have a large reward. So that way you can take some losses and be okay, because when you win, you're going to win usually 4-1 or higher. Sometimes 3-1 or higher, but most of the time it's 4 or higher. So once you get this entry, your stop loss is going to be just below here, probably about a 15 pip stop here, because you're going to enter anywhere between the 70.5 and the 62. Usually I like to go right at the 62 plus my spread just to get myself in there a little bit. Keeps my risk low. And then, of course, I take profit. At the 0% level, I take partial profit, anywhere from half to 2/3, depending on how I feel the market's going to do. If everything looks really good and clean, then I would go ahead and just take off half and let the other half run. In this case, I took off half, and I let it, and then it started to move back down here. Luckily, I only moved my stop up to break even, and then it moved higher, and then ended up, as it moved up, and I was checking the charts, I moved my stop loss up just a little bit more, and then we let it run out. And as you see, it just moves straight up in and hits your target. Now, if you watch my videos, you're going to see this happen a lot. And it's just the way it happens. There's too much to talk about and to explain why that happens. But the point is, you're going to see the strategy work, and you can see what it looks like and what you're looking for. You're looking for the swing low, the break of that daily candle on the last candle of the swing low. Then you're going to look for your entry, which is going to be a pullback into this area here. That's your entry. 2 targets. And of course, if this one was a nice trade, if you were in my group, you actually saw this trade. I actually took snapshots of this and sent it out to my group so that they can see what happened, why I entered, and how everything worked out. Now, we're going to show you the risk reward here. We're going to take this little tool. We're going to place the entry here. We're going to put the stop just below here. So we're going to go 16 pips. And then we're going to move this, and your target's going to be here. All right. So as you can see, we have a pretty much 4-1 trade. 3.9, close enough for me. 4-1. You have a 16 pip stop, and you're targeting around 60 pips. So if you had a 2 pip spread or less, you're probably getting about 60 pips out of this trade after you paid for your spread. but you can't beat that. You get 60 pips a week every week, you're going to be a millionaire in a few years. And of course, if you do better than that, awesome. But most people take more than one trade. I usually do. I take at least two. Depends on how I'm doing. If I'm taking some losses, I will lower my lot size down quite a bit, and then I will take trades as I see them until I make a win, and I'll move my lot size up just a little bit more until I hit back to even where I was when I started losing. Then I'll up my lot size back up to 2%. And that's pretty much that example here. So if you need to take a screenshot of that or anything like that, go ahead. But the main thing you need to see is, remember, is you're looking for the swing low to happen. If you're bullish, if you're bearish, you're going to look for a swing high in the same scenario. Have to wait for the break of this candle before you can enter. If you don't wait for that break, then you're breaking the rules on the strategy. So that's pretty much that example. Let me go to, let's see. I want to actually show you guys a couple of trades. Actually, let's show you the Euro USD trade. All right, let's go. I wanted to go ahead and talk about, a few videos back, I talked about how to trade if you have a full-time job. So I'm going to show you an example of what I'm looking at when I am trading on a daily time frame. So in this case, we're looking at the Euro USD. And let me go back here to the monthly, and we're going to start over. So the monthly, as you can tell, we're very bullish here. We've got a swing low here. So we're going to go to the weekly. And we've had a swing low form here. And we did break lower than the moving averages, and it moved up higher, and we took out this swing high. So at that point, as it's pulling down, we're going to move the daily and start looking for a swing low. We get that move down here, and we get a swing low form. In this case, on the daily, we're actually looking for that for an entry, very similar to what I use on the 1 hour time frame. And we got that actually entered a little bit later, but not too late. But as you can see, I got my entry pretty close to the 62% area, and I'll show you that on a lower time frame here in a second. Stop loss just below this candle, or just below this where I placed the fib, and we're targeting the 200% level. So let me show you. Let's go to the 1 hour time frame. So on the 1 hour time frame, in this case, let me show you. Actually, let me go back to the daily real quick, show you something. Here's that move right here. Now, I actually got in this trade. See, there's your break of this candle, break of that candle. And go back. Now, I didn't enter this on the 1 hour time frame. I'm just showing you what it looks like on the lower time frame, so you can see where the fibs would have been drawn. So we got this break here. We broke this high and this high of the swing low. This was the low of the day here. So once we got this explosive break, we look for the pullback, as the normal rule is. And once you get that, that's where your entry would be. So let me draw this out. This is going to be a long-term trade. So there you go. So you can see we did come into the 60 or into the area, entry area. I actually saw it a little late, but it's okay. Doesn't hurt anything. We're in the trade. I went ahead and entered here, which is just slightly above, but it's not much more above, only about 5 pips or so. So, and plus this is a longer term trade, so 5 pips is nothing. So we got that. And as you can see, the green line was my entry. This is where my stop loss is placed. And this is actually a live trade now. We're actually in profit at the moment. But this is a slow time of the day, so we're going to see some sideways movement probably. And it's also Thursday, so we don't know what's going to happen here in the next couple of days. Might get some pullback more, but this is okay. This is a long-term trade, and it's going to be managed on the daily time frame. So let me go out to the daily time frame one more time. Now, as you can see, here's the entry, and you can also see here that I didn't have to go to the 1 hour time frame to look at it. You could have done this. You would have saw the swing low, and then you would have waited. And once you got the break, then you would have watched this candle form. And even if you wait until the end of the day, it's okay, because if you wait till the end of the day to look at the charts, you've already got the break, and you've got a nice pullback. You can enter at any time, put your stop below that previous candle or the low here. It's all up to how you want to trade. And then you're going to target the 200% level, or you could target this swing high here, or you can even target here, which is a lot more riskier because it's got to travel much further. But in this case, since I got pretty close to the 62% level, I went ahead and just targeting my 200% level. So as you can see, we're getting about a 3 to 3.3 risk to reward, and we're targeting 200 pips to the nose, and we're risking about 60 pips. So that's a nice trade there. Hopefully it works out. Like I've always said in my videos, it's not about winning or losing. It's about controlling your drawdown. So if we win this trade, it's going to be a beautiful trade, 200 pips. This is probably going to take several days. So this is a long, right here, should change the live to a very long swing trade entry. But that's what I'm looking at on the Euro USD. Let me come down to the 1 hour time frame. Let me see. So I want to show you guys one more trade here, and then I'll let you guys go. This was a setup for the high for Euro USD that happened also earlier in the week. And this is Monday, and this is Tuesday. And usually the low or high of the week is going to be done on Tuesday for Euro USD. In this case, if you see Friday, this is Friday, the 8th, the market manipulated by coming out here, faking out below here, and then you're getting a pullback. Then you're getting the rest of the week's move coming up here. But you had a nice entry possibility here, targeting this low or just below it. The 200% level is fine. So in this case here, I want to show you something. If you use the fib entry, you are not going to get this entry. So I want to show you another thing that I like to do. Now this is also taught to me by my mentor, but I just want to show you a nice little trick here. Not going to give it all away, but this is the Asian range here. This little blue line here is the start of the daily candle. Okay, now this is the Asian range. From this high to this low is the whole Asian range. So I'm going to draw that out all the way to the end of the day here. See if I can get see how close I am. Looks pretty good. Okay, so this is your Asian range. What you usually are typically going to see if you're bearish in the market, at this point we were bearish. Okay, so if you're bearish in the market, you're going to see a move happen after 12 o'clock New York time, start to move up into the high of the day for London, which is a fake out. And this is going to move about over 10 pips, usually 12 to 15 pips. Then you're going to get your drop. So you could enter anywhere above, if you're bearish, anywhere above the open of the day or above this Asian high or Asian range. And then you're going to sell. This takes a lot of practice because if you don't know the direction, it's not going to work for you. You never know what's going to happen. This is the most manipulated currency market or pair of all the pairs, the Euro USD, because so many people trade it. So when that move comes up here and you're able to capture it, then you're going to get this nice move down here. Let me show you something. Now, actually, this data feed's different from mine. I actually would have came right into the 62. but I went ahead and entered this, and I didn't hold it all the way down here. I ended up taking full profit off somewhere right in here. I can't remember when I woke up, but my data range was a little bit more closer to here. I know it looks all doctored up, but that's actually the truth. It was a little bit higher than that, but this wick just barely touches my 62% level. But you can see you get to 200% extension all the way down here and actually barely taps it. But that doesn't even matter. The main thing is they were targeting this swing low to look for liquidity to move the market higher. This low is going to drop at least 10 pips or lower. So let me get the measuring tool here and let's find out. So right here, down to there. Okay, can you see that? Almost 14 pips. That takes out all the stops or all the sell stops, enters in all the sell stops. They get the liquidity they need to move the market higher. And then boom, it flies up. And this is when you get your swing low. Now, if this day ends up way up here, of course, then you're going to be looking for your pullback, just like I was talking about for an entry on the 1 hour time frame. But in this case, of course, I just want to show you just another way you can enter in the market. You could have got the 62. It just depends on your broker. My broker that I use for my personal account, I would have hit the 62, but I entered before the 62, pretty much right when this, or right after it came up in there. I entered somewhere right in here as it started to come down, and then I was tired and I went to bed. So, but that was another trade here, and of course I didn't take full profit on this trade. Yes, I know I didn't follow my rules, but I woke up and it was the beginning of the week. I actually made pretty good money on this trade, so I went ahead and just closed it. And I also had made money on AUDJPY, so it was a pretty good trade. I did have a couple losses this week as well, but all in all, up to this point, with all my trades closed right now, I have 2 open. I have this buy, and I have the CAD JPY open right now. And of course, it almost came back up, took me out, but it is now moving back down. So this is, of course, a long-term trade. So let me go to the daily. So long-term trade, again, see, look, we had a swing high, another swing high here, and we're going down. So I went ahead and entered this trade, and then right when I entered, it moved back up. That's okay. It hasn't taken me out of the market yet. It's just came up, made a high, and come back down. So I'm still expecting this to come down to this level. Now, this is not a 200% symmetrical swing trade. This is more of a strategy I like to use. I have multiple strategies, but this is a strategy that's probably my favorite strategy, which I call it the 9 EMA break strategy. And I'll go over that strategy in a video here very soon and talk about that. If you're in my main elite mentor group, which is my personal group, that these guys have that strategy. I actually have the printout of the strategy. They have everything. They have trade journals and all that stuff for me, because those guys get my full attention. So they get that. They have that strategy, and I will go over it. Like I said, go over that strategy and how I use it. There's multiple ways to exit that, but I like to exit at swing lows and swing highs because they're targets. So my first target, take profit, will be coming off here, and then I will let the rest ride to break to this area, and that'll be our final target. Don't know why I left it all the way over there, but there we go. Stop loss is above this candle, the previous candle. The entry was the break of this candle here. We did that. And we're moving. Once we move down here, we're going to be over 1-to-1 on the trade. We'll take profit, some partial profit, and then we're going to move the stop loss. Actually, this will be kind of like a trailing stop loss on the daily candle, but it's going to be well further back because I got to give the market room to move. If you trail your stop loss too close, you're going to get taken out of the trade, and then it's going to continue your way. As long as you're lowering your risk just a little bit, it's going to greatly increase your odds of being profitable and lowering your the chances of you having a up and down equity curve. You're going to have a smoother equity curve. Now, again, sometimes you're just going to go straight up and hit your stop loss. That's going to be your bad trades. But that's why after that happens, you need to lower your lot size and risk smaller percentages until you win again. That way you can control that equity curve. So that's it for this video. I wanted to keep it nice and short for this week. I might have another video later today since it is early. I don't know what that's going to be. I don't know if it's going to be the 9 EMA strategy. I don't know if it's going to be a dedicated risk management video, but you will find out soon. So with that said, don't forget to like, subscribe, leave a comment below, and click the little alert button so you can get alerts or notifications of my new videos. I usually put out at least one video a week, sometimes more, because I'm a very busy person. I can't sit here and do videos every day, or I would. But hopefully here in the near future, I will be able to do at least one analysis video for the week for these longer term trades. That's kind of my goal I'm going to get to, and I'm going to try to get those done. But we'll see what happens. So that's it for this episode of Trader IQ. Trade with Trader IQ. Also, guys, one more thing. Sorry, I just added it on the outro. Check me out on our new Facebook page, Trade with Trader IQ. You can actually search that on Facebook, or I'm going to be adding the link below in the description to go to that. And that is it. We'll see you next time.
I've been watching you.